Welcome to Barron's Roundtable, where we get behind the headlines and prepare you for the week ahead. I'm Jack Otter. Coming up, stocks hitting multiple record highs less than 2 months into the new year. Investment strategist Ed Yardeni sees an economic trend that could power the market higher than even most bulls predict. Then, Toyota may have been right about electric vehicles all along. Its stock hitting an all-time high this week as its profits off hybrids, while other automakers are hitting a roadblock. And later, we have a tip on how you can play the Super Bowl as an investor. But first, we begin with our expert panel and 3 things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues Ben Levisohn, Megan Leonhardt, and Al Root. So, Ben, S&P 5,000, we finally got there. We know it really doesn't mean anything, but it's kind of fun.
No, everybody loves those big round numbers. I mean, They're big and they're round and they're numbers. But no, the number that I really want to draw attention to is the number 14. That's how many weeks out of the last 15 the S&P 500 has been up. And it hasn't had that happen since 1972. And the market's been able to put together this win streak, even though the story keeps changing. The big one is that it looks like, the Fed was supposed to cut rates in March. That doesn't look like it's going to happen, and it just doesn't matter.
1972 was a long time ago.
I wasn't born yet. Amazing.
So traders have this old expression that it's not a stock market, it is a market of stocks. We saw that in spades this past week.
Yeah, stocks were flying all over the place this past week. We had Palantir up 30% after earnings. ARM, which does stuff for chip companies, up 50%. But then you had Eli Lilly, which was up 10% because everybody seems to want those weight loss drugs that it makes. But on the other side, you had things like FMC, which does pesticides, had a little problem with weather in Brazil, and that stock was down almost 20%. But the earnings in general have been good. We're beating by more than we typically beat, and it looks like we're going to have earnings growth of about 9% during the fourth quarter.
So when tech stocks start jumping 50% in a week, technicals say the market's a little bit overbought. I think it's only wise to get a little nervous right now. Are we due for a pullback?
Yeah, the stock market just can't go up forever, and a lot's going to depend on what we see in the next week or so. We're going to be looking for economic indicators. We want to see what's happening with inflation.
We are getting the CPI this week, so that's going to be an interesting one to watch. Apparently, we did get revisions today, and those actually showed that December still remains pretty calm, and we're expecting that to be the same.
Hope so.
And of course, we're going to look for more earnings. It's not over yet, and we want to see those earnings keep growing.
Speaking of earnings, Al, Disney had a beat and raise kind of report.
Yep.
Is Iger actually bringing Disney's mojo back? We've been looking for this moment.
Yeah, I think Mojo will declare Mojo back. It didn't go up 50%, but Disney up 11.5% after earnings. And pretty standard stuff. They did $1.22. Analysts were looking for $1. That was good. They raised their dividend to 45 cents a quarter from 30 cents. Analysts raised their estimates for the fiscal year to about 460 from 440 a share. So everything was, all signs point to higher Disney.
What's powering those earnings?
So Disney was in a rough patch, right? And, they're dealing with declines in linear TV. I hate that term. And versus the streaming, and streaming's not profitable. This has all sort of been about a renewed focus on costs, how to achieve profitability in some of those new businesses. What they said sort of encouraged everyone. So it's well off its highs, but it's still up about 30% from when our friend Nicholas Jasinski picked it.
So speaking of streaming, can you tell me what's going on with this Disney, Fox, Warner Brothers deal? I've heard a lot about it, but I've really heard nothing about it.
Yeah. So
what's this called? What's it going to be called?
STV, sports television, according to one analyst. So it's a super app, right? It's TNT, TBS, it's Fox, and it's ESPN, all on one sports app. Strangely, it is an entity selling you a bundle of channels. Sounds a lot like cable, but it's not. It's streaming. Apparently, we can pause it, so maybe that's a benefit. But if you think about the linear TV, it's gone from like $30 billion a year in revenue down to 10.
Ouch.
And so this is the answer of like, well, if I can get 100 million subscribers and charge them $30 a month, that's a $40 billion business. Look, I've restored my business. So that's the potential, but people are just pulling numbers out of the air right now.
All right, real quick, before I go to Megan, Elon Musk going after Bob Iger. Should Disney investors worry about that?
I've covered Elon Musk in lawsuits. For many, many years. They typically never become investor-level events. So they're watch items, but they're more noise. So, yes, people will sue Disney. Disney gets sued. Twitter gets sued. Tesla gets sued. usually just watch items.
Alrighty. Megan, let's go to kind of a more personal note here. Buying a house. Barron's has written that on balance, even though supply is tight, interest rates, mortgage rates are still high, maybe it's not such a bad time to go hunting.
It sounds counterintuitive, right?
Sure.
But actually, it is not a terrible time, especially if you're already actively looking. I unfortunately am, and I can tell you it's a pretty miserable experience, but mortgage rates are down. So about 6.6%, that's off the high and fall from 7.8. And on a historical basis, that's not terrible. So you do have to kind of make sure that you're keeping everything in perspective when you're looking for a home. Certainly making sure that, you're not only buying for what you need, but also, potentially for a growth opportunity.
Ben was quoting things since 1972. Since then, the average mortgage rate is actually 7.7%. So we're doing better than that. But on the supply side, any new supply coming on the market?
It's going to be tough. I think it really depends region by region. So if you are looking in places like the Carolinas and Texas, lots of new buildings going up. But if you're like myself and you're in, the New Jersey, New York area, there's just no space.
Alrighty.